Let me paint you a picture. Imagine a massive global event that just completely reshapes industries overnight. Now, imagine a single company that saw it coming years ahead of time and built the perfect machine to ride that wave. Well, today, we're diving into a real masterclass in strategic foresight.
It all kicks off right here, January 2026. After almost 20 years of back and forth, India and the European Union finally ink a historic free trade agreement, an FTA. And look, this isn't just some standard trade pact. This was a seismic shift in global business.
And hey, you don't have to take my word for it. The European Commission President, Ursula von der Leyen, she called it the mother of all deals. And why? Because it connects a market of 2 billion people. I mean, the scale is just mind-boggling. To put a number on that, we're talking about a combined market worth over $24 trillion. Trillion, with the T. All of a sudden, this brand new economic superhighway just appeared, promising incredible access and opportunity for companies on both sides.
But that's the big question, isn't it? When a deal this huge happens, with thousands of companies all scrambling for a piece of the action, who actually comes out on top? Is it just the usual giants, or is there maybe another story here?
To figure that out, let's zoom in on one specific company, Acutaas Chemicals. They're a diversified specialty chemicals company based in India. And as you're about to see, they were just perfectly, uniquely prepared for this exact moment.
And that's really the heart of our explainer today. This isn't a story about getting lucky. It's a story about careful, deliberate, long-term planning. It's about how a company's own internal strategy can put it in such a perfect position that when a huge external opportunity comes along, it almost looks like destiny. So what was their secret weapon? It was something they called the triple engine growth strategy. The idea was actually pretty simple, but really powerful. Instead of just relying on one business, they would build 3 separate, high-potential growth engines to drive the company forward. And what's so cool about this is it's like their whole playbook laid out for us. So Engine 1 is their existing powerhouse, the pharma business. Engine 2 is a smart bet on the near future, with battery chemicals. And Engine 3, that's the long game, super high-purity chemicals for semiconductors. Let's break them down.
Okay, first up, the foundation. This is the engine that's already humming along, basically funding the entire ambition. We're talking about their pharmaceuticals and contract manufacturing business, what the industry calls CDMO. This division, right here, is the company's backbone. It's reliable. They set this huge target of hitting 1,000 crores in revenue by fiscal year 2028. And this wasn't just wishful thinking. They already had 5 products out in the market, 4 more ready to launch, and a massive expansion at their main site was already finished. This engine is what gives them the stable cash flow to make those big bets elsewhere. All right, so with that solid foundation in place, this is where things get really interesting. Engines 2 and 3 are where Acutaas looked past its core business and placed these really strategic bets on the high-tech industries that are going to define the next decade.
And this slide just lays out their genius approach perfectly. On the left, you've got battery chemicals. That's for near-term growth, all focused on exports. But check out the date. Their new plant was inaugurated in January 2026. That's the exact same month the FTA was announced. Come on. Then on the right, you have semiconductor chemicals. That's a longer-term play, using a joint venture in South Korea to get access to the tech and the market.
And this timeline just proves it was anything but luck. The whole rollout was meticulous. The battery plant comes online first, right? To catch that immediate wave from the trade deal. Then Phase 2 is already in the works. And at the same time, the semiconductor investment is moving forward, with revenues planned to start kicking in 2027. It's just a clear, step-by-step execution of a brilliant vision.
So what happens when this perfectly tuned triple-engine machine meets the wide-open road of the India-EU Free Trade Agreement? Well, as you're about to see, the payoff was immediate, and it was seriously impressive.
Boom. In the third quarter of fiscal 26, right after the deal was signed, Acutaas posted revenues of nearly 400 crores. This wasn't just a good quarter. This was the first clear signal that the entire strategy was firing on all cylinders.
Now just look at this chart. That's a 43% jump in revenue compared to the same time last year. This is what happens when your rock-solid pharma business is booming, and at the same time, your brand new export-focused battery division is ready to hit the ground running on day one of a new trade deal.
But here's the thing. It wasn't just about getting bigger. They also hit a record high EBITDA margin of over 38%. Now, for those who don't follow this stuff, that's just a key way of measuring profitability, and it shows that their growth was incredibly profitable. They weren't just making more money, they were more efficient at making money than ever before.
So what's the big takeaway from all of this? Well, first, Acutaas built its engines before that new trade superhighway was even paved. They didn't react, they anticipated. Real success, it comes from that perfect marriage of internal strategy and external opportunity. And their triple-engine model, it's a fantastic blueprint for how you can balance a stable, profitable core with smart, high-growth bets on the future. It's just a masterclass.
And that kind of leaves us with a final thought to chew on. Great strategy isn't really about reacting to what's happening now. It's about building the ability to win in a future you can't even fully see yet. The Acutaas story is a powerful example, and it really makes you wonder, how many other companies out there are quietly building the engines for tomorrow's economy today?